All right, everybody. Get myself turned down a little bit. Excellent. How's everybody doing? Here we are on a Tuesday. Get the business out of the way. Risk disclaimer. You guys know this is business of just being entertainment, hopefully educational for everyone. Go to harmonictrader.com, sign up, become a basic member. It all starts there. I think a few announcements by Thursday. I got all this stuff, a lot of things worked out behind the scenes that now, yeah, I'm ready to move forward with some things. Talking with my associate earlier today, and we will talk a little bit later. So catch me Thursday. Really important session on Thursday. Also, if you're not on the Discord, please go over to the basic members page and just simply click on that link and go to Harmonic Pattern Central. Join the discussion there. A lot going on. Here we are. Nice little reactive day today after yesterday's kind of rout. Looking at NASDAQ up about 150, almost 200. Real harmonic though. Beautiful 30-second chart for today. Just wanted to show everyone a nice early long after the 9:30 open. And just for right now, I want to start with stocks, but this is such a sweet setup intraday back to back. I wanted to kind of highlight it, something we can follow along with. In a type 1 reaction off of the bullish bat, and then forms a bearish crab, deep crab in a type 1. That kind of back to back thing, we're seeing this unfold as we speak. Take a look at the crab zone here. Linking up with target 1 off of the original bullish bat. So, this could come back later in the session, later in the afternoon, but if we're making that kind of assessment off of a reaction, clear bearish pattern at a target 1 level, I think it's enough evidence there to pull it. Take it, reaction done. If you want to go short off that deep crab, understand the dynamics of that target 1 coming back into play. And the final determinant, I think, in the type 1 move comes down to where is the trend line violation. For this first move from this morning, pretty nice thrust. And because we know that's a reaction, here's your bat pattern. And let me increase the terminal bar so you can see that we're working with the eSignal platform, which I think is just because of the data that they offer. And it's a paid data service that can be expensive if you get the whole package, but has a lot of bells and whistles that I invite everyone to take the trial and check this out. But all of the parameters on TradingView, Sierra Charts, MetaTrader are the same. I like it because of the data. But clearly, increasing the terminal bar on this pattern, the patterns are, I think, with this platform actually have some of the best graphics. Easy to see the completion points, the levels. But with what we're looking at on the type 1 reaction, it took the better part of 30 bars or more before you even got a confirmation. Hit the hop level at 89 exact. But check out where confirmation came for the bullish side. There. Now, you're looking at hop at 89 for target 1 at 86. That's a huge move, and there you go. This has been fairly strong today, but you understand where you are in a type 1 reaction, hitting that 14,186 and then this crab pattern as well really helps to kind of lay out the immediate minimum objective, and I'll look for 886 retest. If we don't get it, so what? But that first reaction, really nice. Good morning, chat. How's everyone doing this morning and this afternoon and this evening, depending on where you are? A lot to go through today. I think with markets zigzagging, and that's probably more of what we should be expecting going forward. Hard up, hard down, 3 days up, 2 days back. We're seeing that in crypto. Crypto got thrown down. We'll look at Bitcoin in a moment, but we're just not in an acceleration phase of any sort. Even on the downside, even if you were bearish, we expect more of this consolidation whipsaw. And we'll go back through some of the other markets. The thing to be thinking about with that kind of whipsaw market, that we're going to get pullback opportunities if you're long, and profit opportunities if we get 1618 extensions. I mean, I don't, in this kind of environment, think of it from a harmonic perspective. Don't expect moves that will exceed a 1618 extension against the trend, really. Look at this morning, 5-minute time frame. Okay. Here, well, proven wrong, but this is it's funny that the deep crab right off the bottom basically proved my 1618 point wrong. But no, I am more saying these moves are going to be reactionary, and you want to be aggressive at the 1618 level in your management. We'll look at a number of one of these. Let me go to S&P 500. We know there's major patterns there. Daily time frame, it's already in the 1-2 zone, and something about the most recent action is the fact we've dipped down back to retest, come back and start to retest this shark zone, where minimum 886 is at 43.20. You were as low as 43.80. Beware of that, because if we come down and test that 886, that wouldn't be a surprise. A secondary test, and what happens there, of course, will be even more important. One of the discussions we had last week that I think was Thursday during the day with Mitch Ray, outlining what would be the bear market scenario. So with the S&P 500, I think being such a nice type 1, type 2 structure with the shark, again, it does not really occur until we crack these levels. Until then, consolidating. If you're going to retest in a nominal way this 886 1618 level of the shark, those are the minimums. 4300, 4290 on the downside, possibly. And then come back again one more time. I wouldn't be surprised. A lot of zigzagging, but good movement. If you go to the 5-minute chart for S&P, or even 1-minute chart, there have been a number of patterns where, go to the 1-minute, has been moving well. S&P doesn't normally give you huge moves like NASDAQ does. There you go. Actually, the bat pattern on this 1-minute chart. So much like NASDAQ, the NQ, S&P E-mini on a 1-minute chart, ideal type 1 reaction trade. Completion point for the bat pattern was there, automatically identified about an hour after the open. Here's 9:30, folks. Nothing really down there on the open, but comes back for a perfect 886 bat retest. Look where HSI comes in, about 44.32, and does a check back. That's a tough situation because we do look for the check back as a part of the confirmation. If we're here, you finally have a terminal bar, but no pink HSI arrow. You have to wait. I really am just feel that harmonic strength index element within the zone is so critical. So let's take a look, because we're already going to come back down for a type 2, and I'll get to that in a second. But much like NASDAQ, would be the plan. Go back to this 44.36. But this is still one of the best day trading opportunities you can pick off. Why? Because, well, it settled out after the 930 level. You do have your confirmation after pattern completion. Pattern completion, okay. But confirmation there, that's where I find lining up with basically there with harmonic strength index is the starting point. A stronger set of variables for that type 1 reaction trade. And it's helps to quantify it as well. If you can just say pattern completes at 44.36, that's your 886 terminal bar. But your confirmation is 44.31, and you know you're targeting level 1, T1, 44.47. Talking 16, 17, 18 on the top side. Once that triggers, once that checks back, which it did, you have the elements you need structurally. There it triggers. And this is important to review, because you might be in this and looking at this. I look at these as fast as a 5-second chart for NASDAQ, but I'll really kind of base decisions off a 30-second. But the HSI first arrow isn't going to trigger until that bar closes there, which might put you in a spot where you're going to miss it. Sometimes you might. Sometimes there might not be the check back, but our final trigger value is this understanding that this does happen, this final consolidation where pattern completes. Software does all of that for you. Software will tell you where HSI is. Yes, you can get reactions without HSI, especially on that initial test, but ideal consideration is HSI and then that retest. Sometimes it's 2-3 bars. This was 7 or 8. But you consider it, I think, more from a larger zone where this whole part is valid. Now, final piece that helps to, I think, optimize that zone, locate within locate the trade, the trigger within that zone, is looking at the CD trend line into the zone. Sometimes it can be really steep, like this one was. Okay, encompass the obvious peaks, and then know that you are in a much better spot with consolidation to the right of that downtrend. Again, doesn't happen in every situation, but the better kind of developed structures that can give you a better chance up to target 1, and that's what we gun for, is usually when that sets up to the right of that downtrend. Also, that CD downtrend leg, some people say, hey, you can fudge trend lines. Not if you're going to, within this pattern and the CD leg, you really can't. I mean, I could do this or do this, but it's not going to really affect where the obvious breakout consolidation occurs. So I've talked about this several times in the last few sessions where we understand the opportunity is to the right of the pattern. And we're looking for it, confirmation, again, as the trigger, as the first starting point. We have videos on the website, on this YouTube channel, that discuss HSI, confirmation, basic confirmation, or even the sequence. All of that shows you what to be looking for as kind of the optimal scenario within the pattern completion point. Understanding that we're looking for that kind of a move to target one. Now, where's the stop? Well, the stop is under the hop no matter what. If this does not work out, let's say you get the confirmation, your 44.32, your 886 is at 44.36, and your target one is 44.47. So let's call it in the middle. Let's say you're even late to the trade and you're closer to up here, 44.35, 44, even 36, several points off the low. That just reduces the amount of available reaction target profit range. Takes you up to having, instead of gunning for 15, you're gunning for 11, 12. So we could look at that as say, all right, a lot of people argue what's a 3-to-1 stop loss on that, where, okay, if I'm gunning for 12, maybe my stop loss should be 4 points. Or my stop loss 2-to-1, maybe a little bit higher, a little more size. Something like that. Maybe I get 14, 7 points. Something like that. Again, I feel like the degree of your reaction that can happen is so much better when you're to the right of the downtrend or whatever trend it is. And if it's a bearish zone, like we had that bearish in the NASDAQ, look, it's rolling over now. We should look at that really quick. I'll go to that in a second, but it's rolling over. But it's kind of a delayed effect. Same deal here. There's your reaction on the move. But the stop loss is clearly determined by what happens ultimately. Does it hold this hop level? Under 44.27 or 44.26 would be a rather wide zone. Okay, that would almost be 1.2, 1.4 to 1. But generally, that's the largest stop you're going to take, just beyond the hop. I think the other thing is, since we have the confirmation, since we have, in the situation we're trying to identify to the right of the downtrend, the other thing is, the other clear, obvious support or resistance that we're facing is, once we establish two immediate lows, you should not be dipping back down for a third or fourth test. So if we're in this area to the right, you're in the zone, let's say you jump the gun, which is really common. Let's say this would be probably a real common entry to try to jump in thinking you're exploding out of the zone. Okay, then it comes back, and I mean, for one, we should be protecting the entry no matter what, but let's say it went back against you, and you sat on your hands and didn't do anything. Okay, your whole initial strategy here with the confirmation, with the pattern, with the breakout, is that these lows, this consolidation is the floor, is the reaction floor to this zone. And if that's violated, it's pretty obvious, and you would actually flush down to the hop in most cases. That's where you tighten your stops. That, if you sat on your hands, you're not risking 27. You're risking, more like 30 or 29.50. So instead of risking 9 or 11 in theory. You're really risking 6 or 7 at most. Let's flip it to the bearish side right here. With the current, we came in here, we're looking at NASDAQ. We started today. I was wanted to talk about stocks. We'll get to crypto in a moment, but here's that bat pattern. And I was showing on a 30-second chart. If you don't look at a 30-second or a second chart instead of like just looking at a 1-minute chart, pull up a 30-second chart. 233 tick is another one. But we came in with this bearish pattern, and this is exactly the type 1 already has been realized. Take a look at that. And did we hit type 2? Type 2 has already been registered. So, my fault. As we've been talking here, amazing. The type 1 reaction was tested. And I outlined why that first move with kind of a delayed trigger, if you will, didn't come till more than 30 bars later down there, and it was only a reaction. So now this back-to-back pattern formation, pretty sweet. Let's look at HSI now. All right, so up at this deep crab pattern, we had target 1. We have kind of a back-to-back dynamic going on, but the same process of what I was talking about on the S&P example, we're seeing it unfold immediately in front of our eyes with what the software triggered for us, the levels, and then the confirmation right there. I highlighted this as we were starting today's session. I think you should, if you haven't started from the beginning, take a look at the highlight I was doing before this whole thing unfolded as it did. But here is the kind of the back-to-back, not only pattern, but HSI signal where, look, this is a better representation. There's terminal bar, and you can't see it, but the HSI trigger bar right there, that arrow is right there. So then it checks back, does a crazy move. Pretty strong. Again, another reason why if you're not to the right of whatever the CD leg uptrend is, you're probably going to take a little bit more time. But that check back, all of that was saying around 14,183. And as I mentioned, you had that back-to-back dynamic with the target 1 level there. That's when things stack on top of each other to give you the high probability zones intraday. 30-second chart. Take a look at what happens though after you get to the right of that uptrend. The CD trend line should be drawn like this. Hit that C point, encompass the lows going into the zone. So again, tell me where you're right of the line. You triggered on that bar there, but you're not right of that uptrend, that CD uptrend until there. Fair game. Fair game. And of course, just above the hop, that's your first consideration for stop. Why is the hop not a stop? Because it is the maximum tolerance that we'll see within the initial consolidation. Believe me. If you don't have the software or you want to try something like eSignal, by all means, please connect on the Harmonic Trader basic members page. Go here. I think it's worth it because even what I'm showing everybody now as it's happening live, I highlighted all of that before it happened. Go there, get with the basic members, and try those. MetaTrader's the same, NinjaTrader, Sierra Chart. eSignal just has, again, the premium data. But take a look. To the right of that uptrend is the ideal, kind of extra ideal spot where you're not going to get it in every situation. but when it comes together, it's pretty clear. You combine back-to-back pattern situations with it. I think targeting those minimums then become your probabilities of targeting your reactions increase dramatically than a singular pattern. It's just how it goes. This is, look what happened on Nasdaq on the 32nd. So if you know 186 triggers with this other bearish pattern, you want to be dumping that initial reaction long, looking for a full retest. Target one level at 14,186. You have static resistance. This thing, it wasn't busting 14,200. Call it 14,190. Call it 14,187. With your hop level at 14,204, a couple of points above that, a general stop. But once you start breaking down, I don't think it's, the move to 14,146, 40 something lower, that's your highest probability segment. Now look at it. Everybody seeing this? Shout out to the chat if you're seeing this, especially those that started the session with me. I traced it out as we started. Everybody can do this. Everyone can understand this. If you get with the right levels, you give yourself some exposure with it, you take your time, and you see how that unfolds. Here's your full retest against that bat pattern. This is the type 2 return. Take a look. What would I look for at this point? If I was only considering this bat pattern, it's going to be something like this from a larger level. Back down to where the 886 at 131 is the minimum structural level. So under 131, we're trading 15 at the moment. I need confirmation down here, but remember what I said. Get right of the downtrend line. If we're under the weight of that downtrend, primary, yes, or even, there you go. Okay, 30 seconds popping up a bullish crab on the retest. I think I have my pending pattern setting turned off. That's probably was getting generated. Let's stick with this for a second, okay? This is the e-signal platform, so it's probably the same on the trading view, but this is just, I think, better graphics showing it. So bang on, we're looking for 31. It scoots through, and now we've got that deep crab. Do we have HSI? We're about to get HSI. That's the only thing I'm considering now. There you go. The second indicator is amplified RSI. It's nice to see those move in tandem and give double confirmation. We want that. But look, got to get out of there. You need at least 30 more seconds, maybe 60. There you go. Look for this arrow to generate. Look for it to generate. And I do believe we actually are in a type 2. And this is something I'm going to automate. I'm going to bring that one out. I think we hit the 79 level where this move was the return. We got that. So what we need to look for as we're step by step here, 30-second by 30-second, can we get confirmation? Can we get out? You're retesting this morning's bat pattern. You had this remarkable deep crab as we were watching it. So now we're back at 110, 41, 100. Where's the confirmation? And remember, arrow, check back, go. Arrow, check back, go. All right, there's the check back. All right, you have checked back on that level. What would be our stop consideration? Okay, because this is the first spot where we can look for it right here. And the whole zone's game. I mean, there you go. That's your check back level. But by definition, really, that's all good. Tell me what's going to happen here. All right, you're now coming out where 14,110. You start looking here. Does amplified, is that getting out? This is make or break. This would be the bar of the check back where you start the real trigger assessment. Hop level at 100. Maybe it brushes right there, but you're in this 10-point zone where you're anticipating that terminal bar, trigger, check back. Okay, now it's go time. What's going on? We're going to test 100. Amplified's not out yet. Check this out. Amplified is not out. Get out, get out. 30-second time frame. Are you getting out, Amplified? Again, this is where going through it can seem like an eternity, bar over bar. All right, there you go. A little bright brush of green light. Can you get out? Can Amplified get out of this zone? Even better, you start monitoring this uptrend out of the zone. Can you? No. Can you do something like that? Can the Amplified indicator develop out of this zone right now? Because HSI has already triggered and 100's there. You're at 104. I think they're probably going to brush this 100 level. Look at the zone now. Let's draw a CD leg into the zone. Trend line. Is this a no-go? There's your big one. That's primary down off the CD. Can we get to the right of some kind of downtrend line now? We're 14,100. This is a great example because we're on a retest. We know we've got patterns to the left of us. Now you're breaking it down. Can you get to the right of that downtrend? Amplified trying to get out. HSI looking better. 108, 110. Looks like the hop was that ultimate entry. Now you're just two green bars away from exploding up. Into the reaction. So there's your 100 to 10 zone to the right for the first time, showing something on an individual bar basis. Amplified's busting out. And you need to get above the 50 level here and the 50 level here for acceleration. Just know that. Spank right there, right back down. Nope. You're not out. Still there. Hold on, folks, because you're going to wrestle this 14,100. This is the first sign, that first green candle right there. But again, we're going to go between 100, 110, fine. You need to get above, there you go. There you go. You need to get above these 50 zones. To get out of this PRZ here, HSI's got to get above the 50 to really accelerate. But you're larger. See how the 10-point zone is you're trying to locate within that 10-point zone, that 10-point range here. And certainly, look left, look left. Okay, oh, bigger bat now. You got back-to-back bats? Whoa, check this out. All right, so we've got a bigger bat pattern that's now retesting at the hop. 886 of the 886 of this morning's low, actually. Now 12, now 13. So here's the objective is 37. You're at 15 now. I'm sorry, I don't have the pending pattern. I'll set that in a moment. or we would have seen that pending bat before. There's 21, going for 37, folks, but between 100 and 110. Look, I gotta relate what you're looking for in those situations. And this is our second or third pattern in a row. But understand, as beautiful as all of that is, again, 37.26 is what you're looking for. And then possibly come back down all the way. Maybe, a type 2 against that could be something like that. Understand that's a beautiful multi-pattern back-to-back-to-back situation, but I'm still only gunning for 137. If that was a bigger pattern or a better, larger time frame, there's probably more available to you. But again, we're in this reactive phase, and again, it's 12:15, 12:17 at the moment. Not going to be as active as, say, the morning session, but that's just, this came up. A lot of really nice harmonic patterns this morning, and I think it's absolutely, there you go. There's 37, and it's exploding through 42. But there's your reaction. So, okay. Where's HSI? There's HSI. Look at the yellow lines. I'm sorry, I should have had that up as well. Once that got above the 50 level, that's where acceleration goes. Now 54. How you doing, right? How you doing? So now I'm just looking for HSI to trigger. That's a beautiful walkthrough, folks, of examples here. Back to back to back. 30-second chart on NASDAQ. These are intraday, calling it, harmonic pattern workout. That's what we're doing. Maybe this could be a thing. 1 second, folks. What does everyone think of that? Chat? What are we going to... Is that clearer? I really think it's important that we see that. There's your reaction. Okay, individual bar over. Reaction over. Your target's 37. Now you're 36. Now 38. You were as high as 58. But that's it. And then take a look at what's about to go. HSI is about to trigger in that zone. That comes out, you're done. We come back down for a target type 2 return. I did that 3 times, folks. Look, I'm not clicking buttons because of the obvious and stupid regulations. But, I think the essence of what any trader does, because you sit in front of your screen, you're by yourself. You've got to make the decisions by yourself. Even if you're side by side trading in a group, you still have to go through your mind. There goes the framework. There goes HSI. There goes the type 2 return. How many times are we going to have to do that? You have to do that every day. If you miss it or you feel like you need more experience, walk through exactly. There you go. It's right back down for a nice type 2 return. You need HSI. You need this software to do what I just did. You just can't do it any other way. That's the other thing. I know there's a lot of folks that are they're doing things manually. You're having success. You're measuring correctly. I think that's great. But you're not going to be able to do what I just did and the level of accuracy that I just walked everyone through on the last 3 situations. And so think about how that can just raise your game in general when all you need to do is kind of talk to yourself about pattern completion, type 1, type 2. What are those levels? What should I be doing there? If I have terminal bar, I know what I'm looking for. What's the next terminal bar? Confirmation, trigger, go. Back to retest and then go. Target one. And we're done there. And when we're featuring back to back, I mean, this was probably the trickiest thing about this whole scenario was this real subtle, sharp type 2 retest, which it was, and got you to target 2. And now we had another bat pattern. And again, if you're intraday on this, you're clearly out of that long. If you're not out of that long, you need to look at what you're doing. The trade management perspective is so essential. Trade management abilities. You can have all the strategy in the world, but if you're not going to manage position, you're going to have issues. You're going to catch a lot of reactions that just come right back, and then the way I call it is, and hey, I do it. How do you think I learned so much about it? I've done it so much. I get caught in a reaction, and it's like my capital gets trapped because I don't seize it where I need to. Okay, and that's fine. You're going to make mistakes, but if you let it come all the way against you, yeah, that's an issue. I mean, you should be able to kind of scrape that out on some kind of trendline violation, knowing the retest, the type 2 return is, here you go, inevitable. That's how it goes. Let's target the hop 68. You're at 112 now. And whatever comes first, harmonic strength index or hop at 68. Looks like HSI wants to do something, and here you go on the 30-minute. I mean, we're just, come on, right? Look, if there's other things that work for you, use them. But this is the stuff that works for me and everybody that's been on this journey, really, the last several years with the software. It's why I do what I do. I want to recreate the success in other people. For myself, we've done great. I've done great. But I always knew that we can do the software right and we can lay it out and show the dynamics that it will repeat in the markets the same way it does in nature, and all these other clowns that are doing harmonic pattern software, we will dispatch of these yo-yos. But I'm telling you, the true harmonics are in Harmonic Pattern Collection, and I can't have done a more accurate scenario. And even here, here we go, 97, going for a hop retest. We hit the 886 minimum at 98, but look at your indicators. HSI still expanding in the oversold. Give it a little more time, couple more bars, 30, 90 more seconds. You do it on the same way with a daily, an hourly, a 4-hour time frame, bar by bar. What would I be looking for to re-enter this trade? As I said, we're back on a type 2 of that pattern. Okay, look at this dip down. Look at your indicators. They're disgusting. They're failing. Minimum hop retest. There you go, 76, 74. Say hello to 68 in 1 second. With, I want confirmation. This is why you want confirmation on the retest. You'll get a deep retest sometimes, and that will hit the hop. Let's stay with this one more time. Hey, that's a good comment. If you're struggling with the size or the money, go to a micro account. Really, go to a micro account. Micro NASDAQ. I think it's $1 a point or something versus 10, or if you go full futures, 50 a point, 50 a point or 5 a point, sorry, on and 50 cents on the micro. Okay, so you're not, and you just be realistic with it. As we're saying down here, from the 100, 110 level up to 37, you're talking, 27, 30 points. So if you're a micro contract, it's 15 bucks. I think anyone can handle that. And if you're new, uh, that should be enough to get you, keep you going. I do agree that the, a little money, trading with some kind of money is such a mental reinforcer. I do think if you have no experience, you should, never traded, at least do a paper trading, kind of track the market for a few weeks. Don't jump right in, but a micro account's probably the best way to go. Check that out. I don't even think the crypto is a little bit different, Pete. I think you know the crypto has to be a little longer term. I feel, because of the volatility. But what we're looking here, futures, is still the framework of questions we ask step by step. Here you are at a type 2 on a 30-second NASDAQ 100. Where's my confirmation? You're about to get it, it looks like. But this market's full of zigzags. Need to get out there. You need to get out here. This is the interesting spot because, look, green line has stopped. So that's the marker of some kind of RSI, amplified RSI BAM, a type 2. It's not pretty. And this reading was deeper. So we could be looking at another consolidation here. But 68, that was your low. 68 was hit. So if you're on the return trade, you're done there. But you're now going to trigger HSI. So where are we? 30 seconds. Here comes the check back. Check back. Hop level is harmonic optimal price. There's a check back. Okay, you're in business. Check back has occurred. Tell me what Amplified's doing here. It just hit, so your whole consideration phase begins now. We need to get Amplified out, and remember, we're looking for the same thing. Bar over bar. We got to get the Amplified out. You need to get HSI up and above the 50. Get it back there. Your stop level, this is probably a good one where your stop's super tight. This has got to go now. You don't want to see even 3 bars, but if you're in on this 69, like looking for a long 68, 69, 70, this, you have to be looking at this as the low is already in. And take a look at the downtrend line into the zone. Is that, let's line that up properly. Are you to the right of that? Almost. Almost. So you have to be a little cautious until you're to the right. You could get in on that trigger, but I would rather see a little more development. Again, the whole zone is still okay. There you go. That's what you want to see once you get to the right of the line. Bang, bang, bang. Go. Take a look at what's going on with Amplified. Here we go. Get Amplified to go. If not, and I would say, okay, you're at 75. You're bumping your stop loss to 65 if this does not go now. All right, maybe your stop loss was 60 or 59. Let's see what happens here. We're at a type 2, so it must be said that we're anticipating target 2 at 61. Plenty of time. But that's the thought, because we're there at the type 2. Now you're at an interesting spot on the 30-second chart because you're to the right. Every bar that you can get higher is going to be really helpful for that argument. But that also entails strict management. You can't go now, you're done. I like what's Amplified's doing. Check out Amplified and HSI about to crack above the 50. You get like that. That's where, there you go. There you go. Hello. Hey, if you want another trial, just send your information. And it's a good comment, like that he's saying he took the trial, but he doesn't know any of this. All of this is available in the webinars, and even the stuff that's sent through the initial email. So that's why I think the whole learning curve, that's why we do the free trial for 2 weeks, to absorb. All right, there you go, 76, 74. I would be, okay, scratch it now because I don't like it. Look, Amplifieds wants to come back down. HSI wants to roll back over. If you're down there in this low 70s level, maybe I scratch this and I'm done. I look for another entry because it looks like Amplified's going to come back in. This might not work. Gotta have, look, this Amplified indicator is everything. I probably should be adjusting this. In every case, though, your stop loss is up. Notice how we're going sideways for many, many bars, but we're not following through to the upside. Okay, that's where every bar starts to work against the scenario. It's got to break out. Doesn't, you're done. And that's, again, the adjustment of the stop. So probably your first bar that you're entering the stop loss is your widest zone, the widest amount, but you're doing that with the understanding that you're going to adjust. All right, there you go. You need a 3-bar breakout. 3-bar breakout above 1480, 1490. There you go. You got to go now. And then once you're in to the right, you're going to have to adjust as you go. If you do not continue, that's the only thought. But that's going to be determined on an individual or a 3-bar basis. Like, what's the prior low here? It is the hop level at 68. I mean, that was spot on. Your confirmation level on HSI is really about 72 to 73. It's like that. This pink arrow there, and where it checks back. So that's an important spot. If we're trying to locate within that zone, which is what our job is at this point, okay, that's what we need to do. Best to monitor Amplified RSI. HSI as well, but Amplified is going to show it before anything else. And you're at the 50 level. Are we going to get up? Right there. You need to get above the 50 level. You need to go higher. If you don't, so be it. You scratch it. So that's what I have for today. I think this is it's been a good session because I wanted to do something more than just like a broad markets approach. There you go. Look, this could pop. I think that's a good pop there. Gunning for 61 and you're at 79, 161. But we're going to have a lot of reactive moves. So I think, listen, come back Thursday before the holiday. Oh, this is going to be a nice one. That's type 2. But I hope that was helpful. I did want to cover more, but I just think this was such a great bang. There you go. 4 patterns, folks. This has been a really good exercise in the whole framework. Harmonic pattern workout, if you will. We should do more of these. But get with Harmonic Pattern Collection. If you have it, get with a 30-second chart interval and run through what I've been doing over the last 45 minutes or an hour. I do need to get going, so today I'm going to have to put crypto on hold. But again, as I said yesterday on crypto, it's going to take more time. You're going to look for reactions. That's it. I mean, I'll show you BTC for a second, but I'm going to have to get back to it. You're 40,000 retesting all of March. That's all you really need to know. Just look at the range for March for Bitcoin. Maybe you retest the range at 38,000. Okay, but as I said on Monday, all of this crypto is going to take more time. I will talk about stuff like KNC that did go up to reach its all-time high. Oh, you guys got me already, but I really need to go. But KNC did this amazing, hit the all-time peak. This is maybe not all-time. The recent last year's peak retesting. Super strong. My case is, and I'm still going to play this strategy until Bitcoin does something dramatic. Bitcoin's going to hold up the crypto market above 40K so the altcoins can be speculated on. That's it. And they're going to go up and they're going to come back down. I would think KNC's due for a correction to come back down. But let's look at that Thursday. Review this session, folks. Has been a really educational bar by bar session on type 1, type 2, sequence, the whole 9 yards. So again, if you have any other questions, please jump over, become a basic member, Harmonic Trader. It all starts there. And the videos, there are individual videos in that section, in this library, and on the YouTube channel that walk all through everything. All right, folks, thanks again. Catch you on Thursday. As always, go get them. Have a great one.